Turn on your mic, Mr. Chair. There we go.
Okay, good morning, Representative Bartlett.
Good morning, Mr. Chair. Good morning, Commerce Committee. For the record, I am Representative Christy Dolat Bartlett. I come from Concord. I'm representing Merrimack County, District 19. And I'm the prime sponsor of this bill that was requested by the Insurance Department. 1559 is relative to laws administered by the Insurance Department. Good morning. I am introducing, at the request of the Insurance Department, this omnibus-type bill, which will make a number of minor changes to several insurance statutes. It adds clarifying language in multiple places. It specifies an agent's referral fee of $25. It adds rulemaking authority for paid family medical leave insurance, allows reduced premiums during extenuating circumstances, e.g. COVID, allows for notice provisions of a third party when an insured cancels a commercial policy. It adds language to explain the process for liens on property in the Continuing Care Retirement Community Statute. And Marty Mobley and Heather Silverstein are here from the Insurance Department to walk us through the bill and answer any questions you may have. And thank you for your consideration of this legislation.
Thank you very much for your testimony. So Marty, do you want to come up and walk us through this?
Good morning. I'm Marty Mobley. I'm the legal coordinator with the Insurance Department, and with me today is Heather Silverstein.
Yeah, so you, unfortunately you have to have the mic really, yeah, right, there you go.
Okay.
Yeah, sorry.
Okay. Nope, I'll start again. I'm Marty Mobley. I'm the legal coordinator with the Insurance Department, and with me today is Heather Silverstein, our general counsel. And we like to walk you through the bill. I'll start with the first page. In the analysis, I wanted to point out that OLS calls this a technical changes to the laws administered by the Insurance Department. We at the department have always referred to this as an omnibus type bill because though the changes are minor and in our opinion fairly innocuous, they are not strictly technical. So that was something that OLS put on there. That did not come from us. We do not consider this just a bill, though it is fairly the changes that we're making.
Yeah, I believe they do that so they don't have to spell it all out.
So starting with section 1, regarding general premium tax report. This simplifies, the change we're making here simplifies the language that when an insurer submits their premium tax report, which is an annual thing, it just needs to be signed by a member of the insurer's management team. The current language says verified by oath or affirmation. We're just saying let it be signed and then adding the language of the second sentence that clarifies if any false information is submitted on the report, the person is subject to prosecution per the falsification of official matters statute. So we're taking away the requirement that it be an affirmation, but we're just letting them know, don't lie. Section 2, our examinations. In our examinations law, an insurer has 30 days to respond to any issues contained in an examination report. We're adding language here to make clear that a request for more time to respond may also be submitted during that 30-day window. And that is the practice we've been doing, but it is not clear in statute that it is allowed to request more time to respond to the examinations. Section 3, companies and agents insurance referrals. This change is for those instances when someone is not licensed to write a particular type of insurance, so they will refer the business to someone who is properly licensed. Typically, there is a referral incentive when this happens, and with this change, we are stating that the referral fee amount does not exceed $25. That's to clarify the vague reference currently that says a nominal amount. And we're saying that it will not be more than $25. That has been the practice, but now we're just we're codifying it in statute, and just to make it clear. Section 4, claim forms and applications. All forms and applications that are approved in the state of New Hampshire require a statement that cites the statute pertaining to insurance fraud. The current language suggests what the substance of such a statement should be. We're just making the change to say, no, just go ahead and put this whole statement. This is the exact statement. That way it's not like, well, is this the substance? Does this meet that qualification? To eliminate any confusion on what we're actually looking for on the claims forms and applications. Section 5 is regarding third-party administrator certificate. The change here just adds the requirement that a third-party administrator include on their application, when they're filling that out, the contact info for their preferred service of process agent. This is so the department will know who to contact for that service if and when it's needed. It's just asking for more information. Section 6, regarding property and casualty rate filings. Currently in statute, the commercial inland marine insurance carriers are exempt from filing their rates with the department if the policy is not written according to any manual rates or rating plans. The department believes this is a disincentive to carriers who use rates that are supplied by rating bureaus, as those rates are contained in manuals. These rating bureaus adhere to the rating standards set out in RSA 412.15, and they produce actuarially sound rates that support the market and which can be relied upon with confidence. So we're just letting them know that it's okay to use those rates. Section 7, the Patient's Bill of Rights. Currently, an insurer is required to provide a copy of the patient's Bill of Rights to a policyholder. We are proposing a change that clarifies this requirement only applies to major medical policies, as that is the intent behind RSA 151.21, which is the Patient's Bill of Rights, so as to eliminate any possible confusion about when an insurer is required to provide this document to their policyholders. It's just a clarification.
So does that mean not if you're using your med pay on your auto insurance? Is that an example of what you don't have to do?
Right. Exactly. It's only for major medical policies. So if you're getting a short-term limited duration or an ancillary health product or anything like that, you do not need to provide that disclosure, that health patient's Bill of Rights. Section 8, line 13, general group or blanket policy provisions. And this is just adding the same language to the group policy statute. So they don't, if it's a the change in 7 is for individual policies, the change in 8 is for group policies, the same thing. Now, it's only if it's major medical does the patient's Bill of Rights need to be given to the policyholders. And then sections 9 through 11 are the changes that will grant authority to the insurance department to define, regulate, and promulgate rules for paid family medical leave insurance. Currently, we don't have specific authority to regulate those products. We do have general rulemaking and regulating authority under our general RSA 400A, but this will give us specific authority to do that so that we can do our jobs. Let's see. And going over to the next page, section 12, starts on page 3, line 16. Unfair insurance trade practices, rebates. RSA 417.4 lays out what constitutes unfair trade practices for the insurance industry. Paragraph 9 of this statute states that offering rebates as an inducement to purchase insurance is prohibited. However, subparagraph B under paragraph 9 describes those actions that shall not be considered rebates. And we are proposing to include language here that will not considered as rebates those activities that promote the public interest, such as offering temporary premium reductions during extenuating circumstances that affect the entire insurance marketplace, like during COVID, when carriers wanted to reduce temporarily their premiums because they weren't receiving claims, nobody was driving, and this would allow for that to happen. Section 13, refusal to issue, cancellation, and refusal of automobile insurance. Here, we are adding language to clarify that a company may not issue, may not issue a notice of cancellation for non-payment until a customer does, in fact, not pay their premium on time. This change will make the department's position clear if there ever is an issue regarding the date of a cancellation notice for non-payment. Section 14, commercial cancellation grounds for cancellation. Last year, if you'll remember, we modified the language in this statute to allow for the cancellation of a commercial policy at the specific request of the policyholder, the insured, because that was not before an allowed cancellation. And we are proposing language here to make clear that the insured must still meet the noticing provisions contained in their policy when they request that cancellation, but that the company may not have more than 10 days to act upon the cancellation request. And this change will eliminate any confusion. Currently, it looked like before it was like it could happen immediately. We had some concerns from insurance companies that their policy required more notice than immediate, so we are making that change. And Section 15, continuing care communities. RSA 420D9 allows the insurance commissioner to file a lien against the real and/or personal property of the provider of a community care community in order to protect the interests of the residents of that community if necessary. We are adding language here to make clear that any such liens will be filed and registered in accordance with RSA 478, which is the Register of Deeds statute, as the current language in our statute does not sufficiently indicate how such liens are to be recorded and processed. So, as I say, they're not strictly technical changes, but they're pretty mild. And we'll answer any questions.
Well, I feel like I wrote clarify the statute a lot here, so it feels like a lot of it's just making sure that people really understand exactly what you mean.
Exactly, exactly.
How much of this comes from the department, or is any of this from the audit? You know, when you guys have audits, how much is?
Good morning. I'm Heather Silverstein, General Counsel at the Insurance Department. So most of these changes come from us.
Good.
We are working through things and we realize this is not working. We
Right.
need to change this. It's not working for us. It's not working for industry. It's not working for consumers, whatever the case may be. So this is our way of going through and trying to fix the things that are not fitting neatly like they should. I mean, a good example of that, the first one was related to premium tax. There's always been an issue about getting a notary. That became even more difficult during the COVID emergency with regard to companies having to sign through a notary. So this is an easy switch out. You sign, but then you're also saying you can't falsify the report because you can get in trouble for that. And that takes away that. But, you know, these things have always been like a little bit clunky. It made it even worse during COVID. And so we're trying to focus in and fix those things. The same thing with examination reports. You know, it shouldn't be an issue that that a company can ask for a 30-day extension to work out the details of a report and to try to work with the department. You would want that flexibility. That's what we want. So we want that clarity in the statute.
Great. Any questions from the committee members? I think you might, a lot of stuff here, so obviously we'll, unlike the Senate, we don't exec bills the same day because you never know. People might read this and say, geez, I need more clarification on what that means. So it's worth. But at this point, I think we're all set.
Okay. Thank you.
And having no cards, but I can see the blue sheet has that George Russo's, who decides to take up 5 lines here, and says that he is in big-time support because he did the X multiple times. Jim Hayden from State Farm Insurance, also in support, and John Pagano from the Big I. Yeah, okay, great. And they're all in support. And online last night, we did have one person is in support, Daniel Richardson. So with that, I will close the public hearing. 1359.
I put these guys in order,
Okay, great,
what we're doing.
perfect.
It's 10:45 a.m. We're here to introduce House Bill 1558, and to introduce that is Representative Hunt.
Good morning, members of the Commerce Committee. I'm Representative John Hunt, representing Ringe and Fitzwilliam. And today I'm introducing another departmental bill, Insurance Department bill. This is NIC model law, and it's related to receiverships, group capital calculations, liquidity, stress testing for internationally active insurers, and these changes are an accreditation standard. And Doug Bartlett will help you out. So I just want to spend one moment for make sure everybody understands what we're doing, what this is. So remember how we were talking about the UCC as being this model legislation that comes down, and that model legislation is created by smart lawyers and connected with all across the country, but it comes out of Chicago. They have created this entity in Chicago that creates that model legislation. Insurance, as some of you might be familiar, is a territory that is treated sort of like the UCC in the sense that insurance regulator is in that state. So if you are starting an insurance company, the first thing you think about is what state I want to do this in, because that state is going to be your regulator, okay? And it's very important that even though you might be selling insurance products all across the country or internationally or wherever, your regulator is not the federal government. It's actually the insurance department in the state in which you domicile. So same issue came up with, well, we want to make sure that every state is doing the same deal, that there aren't too many, doing anything too crazy from one state to another, and that's where we get the National Association of Insurance Commissioners, NIC. So NIC that is designed to create model legislation that is then distributed to the states, and hopefully they all enact it, and you actually get rated on how well you're doing in terms of upholding the NIC standards. And again, that is the attempt to have a uniform statutes across the country, but that at the end of the day, it is the individual state that is the regulator. And with that, I will then allow any questions, if anybody has any.
Anybody have any questions? Okay, seeing no questions.
All right.
I have a card from Doug Bartlett for the New Hampshire Insurance.
Chairman Hunt, members of the Commerce Committee, I'm Doug Bartlett. I am the Director of Financial Regulations for the State of New Hampshire Insurance Department. This bill incorporates updates to an Insurance Model Act regarding the group capital calculation and the liquidity stress testing for internationally active insurance groups. New Hampshire is the U.S. group-wide supervisor of the U.S. insurers in the RSUI group, which is part of a larger Allegheny group. Because there are insurers within the Allegheny group, which are mainly in the transatlantic holding group, that write in foreign countries.
Hey, Doug, you mind speaking a little bit louder so
Sure.
we can get this
Okay.
recorded right?
Back up a little bit. Okay. New Hampshire is the group-wide supervisor of the U.S. insurers in the RSUI group, which is part of a larger Allegheny group. Because there are insurers within the Allegheny group, which are mainly in the transatlantic holding group, that write in foreign countries, we need this law. The revisions to the NEIC Insurance Holding Company System Regulatory Act, Model 440, which is our equivalent or the New Hampshire RSA 401B, were unanimously adopted by the NEIC to enable the requirement for the group capital calculation and the liquidity stress test. This is an accreditation standard for any state that is the lead state and has insurers in a group that write in foreign countries. And just to add what the Chairman Hunt said, an accreditation standard, usually if you see an accreditation law, I'm going to be the one you're talking to. It's usually to do with, financial regulation and things like the holding company and just supervising insurers. Because, you can't have different states having different rules for, so the U.S. Insurance regulators have adopted a group capital calculation for the use in the solvency monitoring activities. The calculation is intended to provide additional analytical information to the lead state for use in assessing group risks and capital adequacy to complement the current holding company analysis for the U.S. The liquidity stress test considers the financial institution's ability, in the absence of the market or funding liquidity, to meet obligations during periods of stress by accurately measuring the liquidity profile of the balance sheet in an enterprise-wide level. So these tools are in addition to other tools such as enterprise risk management reporting, Form F, supervisory colleges, and these things were added to RSA 401B back in 2014, and the own risk solvency report, which was made in separately on RSA 401C, which was enacted in 2015. So it's just as new tools come along, we add them to the holding company law, and I would be happy to answer any questions that you have.
Great. Any questions from anybody? It's quite a long document, so my.
I think we know
Yes,
better.
Representative Herbert.
We know better than to ask Doug any questions.
Right. So Representative Herbert, pull that microphone real close to you.
Okay, so if I understand correctly, New Hampshire is a designated, is a lead state, is that what you said?
It's the lead state for the group.
Okay.
The lead state is determined when you have, let's say you have 5 companies. The company that writes or the state, because it could be more than one company in the state. In this case, 3 of the companies are in New Hampshire. Okay, and we have the volume of premium in the United States.
Okay.
Therefore, we're designated as the lead state.
Okay, so in other words, if I understand correctly, these changes allow for enough liquidity, or whatever the word is, collateral, so that these corporations can stay in the state and operate here. I'm
Well,
probably not
yeah.
restating it correctly, but
Yes, and so they can operate in the world.
right.
Not
Yeah,
just,
I
not
noticed some of the numbers are really big, so.
Well, this is like I say, we are also the lead for Delta Dental. Well, they're not going to be writing in foreign countries. Saying the Hanover, they're not going to be, we're the lead for the Hanover. They're not going to be writing in foreign countries. But this company happens to have members or insurers within the group that write in foreign countries.
Okay, so I just wanted to make sure what we were accomplishing here, and it sounds to me that if we want our status to remain, that's what we need to do.
Yes.
Thank you.
Think of it like a bond rating, and we want to be AAA. So we do this, we keep up to date, and as long as you dot the I's and cross the T's, then you have that credibility. And so and this is really for insurance commissioners of other states or countries to evaluate a company who's coming in to sell their product, if they want to decide whether they really want them to be in their state or in their country, is to say, okay, so let's look at their regulator, and is their regulator got the AAA ranking? Would you believe?
Yes.
Okay, thank you.
Okay, thank you.
Having no more cards? And let's see, I have nobody online. And Joan, again, is, from the Big I, is in support of the bill. And with that, I will close the public hearing.
What's the next one?
Okay, we'll open up the public hearing on House Bill 1019. The prime sponsor is unable to make it, so Representative Petusek is going to read his testimony. Speak
Thank-
loud and clear so we get it.
Thank you, Mr. Chairman. Is this loud enough? I don't usually need this thing either.
Yes, you do.
Thank you. House Bill 1019, for the record, Representative John Petusek representing Rockingham 6, which is Derry, New Hampshire. HB 1019, establishing a committee to study the replacement of certain professional licenses with a mandatory minimum liability insurance requirement. The analysis states this bill establishes a committee to study the replacement of certain professional licenses with mandatory minimum liability insurance requirements. Representative Mike Harrington is the sponsor, and I'm going to read what he asked me to read. Chairman Hunt and Commerce and Consumer Affairs Committee members, I am the prime sponsor of HB 1019, but due to a change in my schedule, I am not able to attend today's hearing, so I am submitting this written testimony instead. This bill would establish a committee to study the replacement of certain professional licenses with mandatory liability insurance requirements. Over the years, there have been a proliferation of laws requiring a state license to perform various professions. The thought being that if the government does not regulate and licenses those performing these occupations, the public safety would be in jeopardy. This bill would study the possibility of requiring liability insurance instead of obtaining a government license. This effectively would have the underwriting insurance company regulate the profession. This is not a new concept. Insurance companies impose many requirements on their policyholders and perform inspections to be sure that they are met. This idea is being looked at by other states, and the study committee would investigate as to whether this approach could or would work for New Hampshire. I would like to leave you with an example of a potentially very dangerous profession where there is no government regulations, oversight, or professional licensing requirements. That profession is scuba diver instructor. Scuba diver instructors are certified by private organizations such as the Professional Association of Diving Instructors, PADI. There are no laws that dictate how they do this. They develop their own standards and have certified thousands of instructors who have certified millions of students. So what are the results? While scuba diving puts one in a hostile environment where lack of proper training and equipment could lead to death, it has been shown to be a very safe activity. Who could have imagined properly trained people performing what could be a dangerous activity in a very safe manner without any government involvement? The rules of organizations such as PADI go beyond just training, however. Try to get on a dive boat or rent dive equipment without a diver certification card, and you will be quickly told, no way. Again, there is no law that prevents this, just the fear of liability should someone rent diving equipment to someone who is not certified. I would ask you to give this bill careful considerations, and I will be available to answer questions after February 13th. P.S. from Mike, I checked the New Hampshire laws, and there are only two that deal with scuba diving. Both deal with navigation and state requirements for putting up a flag while diving, and the penalties for boats that go into the boating exclusion area around the flag. That, ladies and gentlemen, is my testimony from Mike Harrington. There's supposed to be someone here who can answer any technical questions about this. Thank you.
You going to be that, Ross? Okay, well, thank you very much for your testimony. So I have two cards, one for, one against. So we'll, unfortunately, the one against is a representative, so we always invite representatives up first, even though they're in opposition. But when when you have another chairman in the committee room, you always treat them with great care, because when you're in front of their committee, you want to get the same special treatment. So, Will Inventine, in opposition to the bill.
Thank you, Mr. Chairman. I'm speaking today on behalf of the Electricians Board. I am the Vice Chairman of the New Hampshire Electricians Board and have been for a number of years. There are approximately, I think, 52 different organizations under the OPLC that are where we have licensed individuals. Liability insurance covers bodily injury and property damage. It has nothing to do with enforcement. And as electricians, there are things that, if done wrong, people get hurt and die. So it's not only getting licenses, which is dealing with making sure you have certain education requirements and certain amount of hours. Then has to do with enforcement, and when enforcement finds that people have violated the rules, they can be brought forth in some kind of disciplinary action. My wife also used to serve on the cosmetology board. Similar things there, where places were utilizing or violating their licenses by utilizing chemicals and other things that were either banned in the state of New Hampshire, or they were doing things that were harming individuals. I'm sure you know that very well, Representative. So this does not work in every mechanism. It may for some of the smaller ones. SCUBA, self-contained underwater breathing apparatus. I loved learning that when I was a kid. So that may be so in that case. And I know we're trying to reduce the amount of occupations that are licensed. Some may be frivolous and not needed. But by and large, some of the major licenses held and managed by the OPLC offer the education, training, enforcement, and then disciplinary action for not following those rules. And it is important, and it can't be done just through a liability policy. As you know, I'm the national member of the New Hampshire Insurance Agents Association on a national level. As I said, it's bodily injury and property damage is covered by a liability policy, much more narrow, but I will let our executive director speak from an insurance standpoint. So I know this is a study committee, and I know we're really happy to have study committees these days, but this is probably not applicable for some of the major licenses that are held here in the state. Thank you, Mr. Chairman.
So I was going to ask Joan the question, but I'll ask you first, and then Joan can answer it. So when I first read this, I was a little confused. I wasn't sure exactly where it's going. Obviously, we heard the testimony, but because I always think about we have requirements for bonding requirements, but the idea that we have liability insurance requirements in terms of the other, I mean, I don't know, you sell these products. How often are you complying with somebody's insurance, a legislative mandate that they have liability insurance versus just the general bond requirements?
I know as a legislature, we try to stay out of putting insurance limits in law. We do have so in the condo law, I know.
Yeah.
But we try to keep it up because, what limit you put in now, 10 years from now, is going to be obsolete, so we try to stay away from that. Bonding, the two types of bonding you're talking about, Mr. Chairman, one is a financial guarantee to complete a construction-type project. It covers performance bond guarantees the performance of the project. The payment bond guarantees that everyone will be paid.
Right.
The other type of bond, a fidelity bond, guarantees you will follow the rules or you will pay a penalty.
Right, fidelity bond.
Yeah, but
Now,
those are
but I know, like real estate agents, we require a bond of them.
$25,000 bond. A lot of times that has to do with because they're taking deposits. You're taking a check from someone as a deposit.
Right.
I don't really know there's ever going to be a fine that's going to be paid for. I think it's a financial portion of that.
Okay.
But again, liability is bodily injury and property damage. It has nothing to do with some of the other things other reasons, a license in place. And quite frankly, all the rules and that we have in place for the Electricians Board, I don't believe there's any insurance criteria. It's a totally
That's
different
what I'm saying,
matter.
most they don't have insurance requirements, they might have some bonding requirements, but they don't have insurance requirements, that's what I'm thinking.
That's correct.
Okay, great.
All right,
Thank you very
all.
much for your testimony.
Come
Okay.
on over to labor whenever you'd like.
All right, so I'm sorry, Ross, I saw Joan, I missed Joan's card, so let me have her come up first, and then you can get the chance to wrap it up. Okay, Joan. Yes, please. Yep, come on up. So maybe you want to tell people what the big I means.
Good morning. Thank you, Mr. Chairman and committee members. My name is Joan Peugeot. I'm the president of the New Hampshire Association of Insurance Agents, also known as the New Hampshire Big I, and I serve as their lobbyist. Our members are the independent insurance agents located in all the communities across across New Hampshire. There are over 200 our members have over 200 office locations throughout the state, and we are opposed to this bill. Understanding that the bill is to establish a committee, I think it's important to look at the goal, which is to replace certain licenses with an insurance policy. Professionals, especially and speaking for the insurance industry, work hard to become licensed. We study, we pass an exam, and then through continuing education, we continue to learn the nuances of one's chosen career. Consumers rely on professionals to give good advice, provide quality services and products, and the best way to make sure they're getting this good advice is to verify the professional is licensed. We believe substituting a hard-earned license regulated by the state for an insurance policy that could be canceled the day after it's taken is putting consumers at great risk. Thank you, and I'm happy to try to answer any questions.
Great, so if I get your testimony correctly, so it's, if you put this in the statute, somebody's got to look over to make sure that that liability insurance is always in place. And that's usually what a licensure board would be doing.
Or a licensed board is going to make sure that the professional is maintaining and is in good standing with their license. You know, a good professional is going to make sure that they're properly covered. With the insurance industry, they purchase professional liability, so that if they make a mistake, an insurance company is going to step in to represent them in the event that they're sued. What I see with this bill is that they are putting the onus onto the insurance company to make sure that that professional is rising to the standard that the consumer needs. And I think that is a mistake, again, because an insurance policy can be purchased today and canceled tomorrow.
Great. Any questions? See none? Thank you very much.
Thank you.
Okay, Ross, now you're up. In support of the bill.
Thank you, Mr. Chair and members of the committee for holding this hearing today. Just for the record, my name is Ross Connolly. I'm the Deputy State Director for Americans for Prosperity. We are neutral on the bill, but we support its intent for a host of reasons. Occupational licensure is the most burdensome form of government regulation, requires thousands of hours in some cases of training, lots of monetary investment as well. And according to the Institute for Justice, their study License to Work showed 16% of New Hampshire's workforce is licensed, and due to onerous regulations associated with those licenses, an estimated 8,032 jobs are lost. And before the pandemic, the Department of Employment Security cited barriers to entry as a driving force behind Granite Staters not being able to acquire a job, and that has only been exacerbated from what we've seen post-pandemic or during the pandemic, this barrier is difficult for people to cross, especially low-income folks, to enter into licensed fields. So we support looking at alternatives to licensure that removes some of those barriers that are preventing people from entering a licensed field, but also protects consumer safety. I can't speak specifically to this. I only found out about this bill last night, so I can't speak specifically to the limited liability insurance, but we do I'll hold up this chart of just some alternatives to licensure that legislators can look at. This was something we supported a couple years ago. It was called the Board Reform Act, and it would have created a committee similar to this bill, but having all these options that the committee could analyze alternatives to licensure that does still protect consumer safety. So things like fraud, depending on the industry, there's a correlative option that we can list that reduces that burden but protects the public safety. As has been pointing out, this bill, all it does from my reading is it establishes a committee to study this. I would advise maybe having some other options for licensure, not just the limited liability insurance, as has been pointed out, that may not cover, be a good option for every single industry that's licensed. So having some other options would probably be advisable. And with that, again, we support the intent. We applaud the sponsor for looking for these options, since it's one of the highest of licensed fields. It's one of the highest amount of people employed in the state. So it's a huge amount of the workforce, and we should be looking at alternatives to make that easier. So with that, I'd be happy to try and answer any questions the committee may have.
Representative Burrows has a question.
Yes, I don't know if you can answer it, if Representative Patusa can. I'm wondering if there are any specific industries that were of concern when the bill was written.
He's not the sponsor.
No, I know he's not, but I asked if he might. No.
Thank you for the question, Representative. I can't speak to what industries the sponsor may have had in mind, but there are many fields, and there's a whole host of bills. If you go talk to Representative McGuire over in EDNA, I'm sure she'll tell you about the list of bills that they get looking at making changes. There was one on athletes agents. Last year there was one to remove the license for lightning rod inspectors. Things like that. We have a lot of licenses where there could be improvements made to statute to reduce that burden, whether it's just the regulations on the amount of hours required or the fees included. There's a lot of areas we could look at, but unfortunately I can't speak to what the sponsor had in mind.
Thank you.
Representative Bealow.
Thank you, Mr. Chair. Thank you for taking my question. I'm a licensed cosmetology. I have been for nearly 50 years. And
Close to the mic.
For several years, I've been a cosmetologist, and I did go through the course, and the licensing, the test that you have to take. And we learned an awful lot. I mean, there's a lot involved in cosmetology. So would you feel comfortable going to a salon where the hairdresser or the barber was not, didn't go through any type of, licensing procedure, or the 1,600 hours?
Thank you for the question, Representative. I would say it depends. So it depends of what it would be replaced with. If we just remove the license and replace it with nothing, that's probably not a very good idea. I think having something to back up and protect consumer safety, and whether, cosmetology, and that's a very wide-ranging field. Years ago, we got rid of the license for hair braiders, since hair braiders were required to have the full cosmetology license, even though they only covered one specific area. So I think looking at each industry of where, some of those regulations may not be necessary is probably a good place to start. Starting with, let's just get rid of all the licenses would not be a good move for consumer safety. So I think having a commission that could look at what areas could be changed without putting the public at risk and opening up that field to more people would be a good route to take. So studying it instead of jumping ahead would probably be the better route to take.
And just to follow up.
Further question, you may inquire.
Yes. If there is a study committee formed and there is not a hairdresser or a cosmetologist on the committee, how would you make decisions relating to that industry?
Thank you for the question, Representative. I think as this bill is, I believe it's all members of the legislature. So similar to someone like Jail Car looking at this and just, but opposed to Jail Car, they wouldn't have any actual power. It would be advising the committees like this one on what changes they could make, since the licensing fields, again, there's many of them. It can be very complicated going through each license. So I think that's sort of the direction to go in, is having the legislature and a member like yourself could be part of that commission that does have experience in that field.
Thank you.
Representative Ammons next.
Thank you, Mr. Chair, and thank you for taking our questions. Would you agree that there's a Goldilocks zone when it comes to regulating industries? It's not too hot, not too cold, just right, and it's a balance between consumer protection and protectionism within the industry. Would you agree, and could you speak to that?
Thank you for the question, Representative. Yes, I would agree that there is a certain amount of protectionism within licensed fields. Obviously, if somebody goes through the training, goes through a very onerous and burdensome system to get their license, they may not want others to have an easier time. But I think largely it's more of driven by this idea that it does protect consumer safety. There's multiple studies that show, depending on the license field, that it actually doesn't do anything to protect consumer safety. And again, there's many lists, and I can submit that to the committee in written testimony of fields that are currently licensed in the state of New Hampshire that may not necessarily need to be, and that an alternative would be a much better avenue to look at.
Representative Bartlett.
Thank you, Mr. Chair. I'd like to leave aside the idea that in this bill, and we're just going to talk about this bill, we're asking for a study committee that would go through the House, go through session, go over to the Senate, go through the Senate committee process. If it were passed, then it has to go to the governor before this could happen. And this is the second year of a biennium. Put that all aside to see if this could all get done before July, because we don't meet after July, and then we've got campaigns. So that probably makes the fall pretty tough. How do you think that, just looking at this bill, the enforcement would be addressed? Would that be government enforcing, or would that be insurance companies enforcing to make sure that there was a liability policy in place?
Thank you for the question, Representative. As I pointed out in my testimony, I can't speak directly to the insurance liability portion of this bill. I don't know how that will actually impact things. We were just speaking generally to looking at alternatives to licensure. It's how it would play out. What we would prefer would be similar to the Board Reform Act, which over the course, we predict this would take years to actually go through every licensed field, look at every little regulation. So we would probably prefer to have a prolonged commission that can oversee this, since it would take a lot of time and effort to go through this. And as you pointed out, that's probably not going to be the case in this year. So I would probably advise to stretch out that time period of that they would have to study the licenses.
Representative McAleer.
Yes, you mentioned that you had a list of occupations that you didn't think licensing was necessary. Do you have that list? I would like to see that list, and I would like to see, I'm assuming that you have the reason why you don't think that a license might be needed. Thank you.
Thank you for the question, Representative. We have just an initial look at, you can look at the Institute for Justice's license to work. That's a great place to start, where they look at the low income, the most burdensome. We consider those low income entry level positions. That's where we're not talking about doctors, lawyers, some of the really highly technical fields. Some of those lower entry level fields, we believe that changes can be made to reduce that burden of entering the field. A lot of people that are low income can't, for instance, pay tens of thousands of dollars for training and take years to go through all of the hour requirements. So whether it's looking at eliminating a license like lightning rods, or last year this legislature removed the law that made it illegal to cut somebody else's hair without pay. That was kind of made national news. Those little things are an area that we can look at, of removing some of those areas that it's obvious that this doesn't have much of an impact.
Representative Herbert has a question.
A question to the chair.
Okay,
Is it, Representative, is it Harrington?
yes.
What's stopping the representative from going to, what was the OPLA? And requesting
We don't,
license
we don't-
requirements?
we don't discuss people's motives or objectives or what they're doing. So if you see him, you certainly, the subcommittee will take it up. But actually, I'll get to where I think the question really should be. And that is, when you have a study committee, you don't want it to be too wide range. You have a very limited time, which I thought Representative Bartlett was going to go. It's a limited time to get this bill out of committee, make a suggestion for the next biennium. So my preference would be is that you call through your list there and actually identify specific licenses that you think that we could help. Normally this is done by EDA, and Carol has done a lot of this work already, but it's here, so we'll look at it. But it would be very helpful for me, if I wanted to really pass this bill, is to actually pick out a license that it's worth considering.
Absolutely. Thank you, Mr. Chair. I agree, and luckily, right now there's many bills that are addressing that, going through ED&A, whether it's athletes, agents. Actually, that went through judiciary, but there's a host of bills out there that representatives have identified as being some of the most egregious.
Great. So you.
But I'd be happy to
If you
provide
could
a list to
help
the
out
committee.
Representative, because I'm going to say the same thing to him. I mean, pick something out, but in terms of just saying, go over the transom and find something, I guess you would start with a list of licensures and say, and then whatever, but, you get what I'm looking for.
Absolutely, Mr. Chairman,
Okay.
and I appreciate the sentiment. Again, our intent, our support is for the intent behind this
Yeah,
bill,
no, I
is just
get that.
looking at changes.
Exactly. All right, Representative Bilo has another question?
Yeah, thank you, Mr. Chair. Thank
Get
you
close to that mic.
Thank you for taking my question. As I read the bill, it says, establish a committee to study the replacement of certain professional licenses with mandatory minimum liability insurance requirements. Number one, someone from the insurance division came in and spoke about limited liability insurance. It would not be workable. And number two, a study committee should be studying the licensures and not come up with, in the bill, a replacement, which would be mandatory minimum liability insurance. If you want this bill to move forward, I think we need an amendment so that it just doesn't focus on minimum liability insurance requirements replacing licensures.
Thank you for the question, Representative. I would agree. I think, taking a one-size-fits-all solution to licensure isn't the best route. Again, it doesn't, limited liability insurance would not be an effective replacement for every single license field. I think that sort of restrains what the committee can look at, too, of some of these other alternatives. So I would tend to agree with you.
Thank you.
Yeah, actually, that's the one last question I have. That chart you showed about all the different things, where's liability insurance on that chart? How high up the list is it?
So we have, let's pull it out here. It goes through things like market competition, consumer created ratings and review, aka Yelp, Uber, private certifications, which seems like what the sponsor was going for when it comes to scuba diving. They are private certification. Voluntary bonding and insurance is an option, but again, it's not. There are many options: inspections, regulation of process.
Yeah, so where was that on the level? Was that down at near the bottom, or is that these are just
It's in
ideas?
the middle, but
Okay, it's in
the
the middle.
ranking is not based on what is the best. It's what are the options based on
Oh, I thought
the burden.
that the bottom was the best. Bottom was minimal regulation.
So it goes from, and I'd be happy to send this to the
Yeah, that'd
committee
be
as
great if you-
well.
yeah, send that
It
to
goes from licensure, it's just the ranking of burden. So the ranking of what
Right.
someone has to go through. It starts at the bottom with licensure as
Cool.
the most burden
Yeah,
and,
yeah.
and market
Great.
competition.
Yeah,
as the
just email
least.
that to the committee members. That'd be fun. Great.
Absolutely.
Thank you.
Thank you for your time.
Having no more questions, we'll close the public. Before we close the public hearing, the overnight blue sheet, I have one supporter, Daniel Richardson, and nobody signed in on the blue sheet. All right, with that, I will close the public hearing.
That's right. We could,
Okay, we'll open up the public hearing on House Bill 1048 and hear from the prime sponsor, Representative Patusek. Good afternoon, Representative Patusek.
Good afternoon, Chairman Hunt, and my esteemed colleagues on Commerce and Consumer Affairs. I am here to present House Bill 1048 relative to minimum non-forfeiture amounts under the standard non-forfeiture law for individual deferred annuities. Try saying that fast 3 times. The analysis, this bill will modify the interest rate used in determining minimum non-forfeiture amounts. Okay, I am introducing House Bill 1048 at the request of the Insurance Department to incorporate the recent interest rate deferred annuities that was adopted by the National Association of Insurance Commissioners and AIC to their standard non-forfeiture model law. The insurance industry is very much in favor of this proposal. Heather Silverstein is here from the Insurance Department to answer any questions you may have. Thank you for this consideration on this legislation. Thank you very much.
Okay. We have any questions from the committee members? Seeing none. Thank you very much. Okay, Heather Silverstein. Welcome back. Good afternoon. Yeah, you just have to make sure it's on and pull it close.
Is that better?
Closer.
Good afternoon. I'm Heather Silverstein. I'm General Counsel for the Insurance Department. And this bill is, again, one where we're trying to sync up our practice at the department with what the National Association of Insurance Commissioners has recommended through their model law is 805 in particular. For the model law that we're talking about here is for individual deferred annuities. So this is just a situation when someone has been making payments on an annuity and then they stop making payments. It's kind of in an accumulation phase. Then what money are they going to get back? So it's the value of their annuity at the time, and then there's other factors that come in this law. And one of the things that happened at the NEIC was industry was saying, hey, you're making it really hard for us to even market these products because the interest rates have been so low. You know, you take like U.S. Treasury bonds and whatnot, the interest rates have been really, really low. So to have to use this 1% interest rate, that's not really working when we have to provide this return, this non-forfeiture amount. And so that's how it came at the national level, where they reduced the rate at the national level. And again, it's just a floor because if the interest rate went up, there's going to be some competition there. So they could always charge a higher interest rate, like for what the consumer would get back if they wanted to. And so we like to be consistent with what other states do in this particular area, and so industry is in support of this, and so we're just syncing up our law with what other states have done and what the NEIC recommends.
Okay, any questions from Committee Representative Abel?
Yes, thank you for your testimony. My question is, could you, in everyday language, explain what this non-forfeiture interest is all about for those of us who don't deal with this ever?
Well, so for the best is basically, you know, like I said, when there's a surrender, you know, like I've been paying on an annuity and then I've just decided I don't want to do this anymore for the consumer. They want to.
Maybe you should tell them what an annuity is.
Annuity is, yes, is in the life insurance type world, and it's an investment, and it's meant for longer term, okay? But what happens is there's times when somebody just decides, I don't want to do this anymore, whether they can't afford the payments or they don't want to invest in this anymore. It's an investment product. It's an insurance product that we regulate. That's not like a securities. We don't regulate that. Okay, so I guess that would be the simplest way. So then when the consumer wants to get out, this law is focusing on what are the minimum amounts that the company would have to return to the consumer. And it's their value at the time that they want to get out, and then now The 1% interest rate, which was one of the factors, that's the part that wasn't working because the interest rates have been so low. And I gave the example of the Treasury bonds. So that's why we made that adjustment, so.
Okay, Rich?
Yeah, just one quick follow-up. So this is the payment from the company to the individual, that it could be paid at with a lower interest rate?
Yes, that's correct.
Thank you.
Okay. Thank you very much.
Thank you.
And Simon Thompson? ACLI. Is this one of Berkey's clients, ACLI? Yeah. Yeah, yeah.
All right. Good afternoon, Mr. Chairman and members of the House Commerce Committee. My name is Simon Thompson. I'm with the She & Finney Capital Group, and here today on behalf of one of our clients, ACLI, which is the American Council of Life Insurers. The ACLI members account for 98% of the annuity contracts issued in New Hampshire. And I'm not going to read this full testimony, that's why I've handed it out for all of you. But as Ms. Silverstein and Representative Patusek said, the industry is in strong support of this bill, House Bill 1048. And I just wanted to say that this bill will help ensure the continued availability of important retirement products for the New Hampshire consumers that our members represent. So with that, I will let you read this testimony at your leisure, and I will end my testimony. Thank you. 30 seconds.
Yep, Representative McAleer.
Just a quick question. What's the non-forfeiture rate for life insurance? Is it the same as the annuities?
I am not sure. I don't want to answer that
Okay.
without knowing that for sure. But I will check on that, Representative.
Yeah, Representative Abel.
Okay. I'm asking, this is the Lieutenant Colombo question. Explain to me why allowing the company to pay less is good for the consumer.
I think it's more a matter of the national standard where the interest rates have become so low that there is now needs to be a floor where the companies would reimburse the consumer at that percentage. And that's just because of the rates and where they are at a national level.
So this is better for the consumer because right now they're cutting off at 1, so now we're allowing it to go lower. So the consumer will get something. So it's a good thing for the consumer. Yes, Representative Johnson.
Thank you for taking my question. Just so I understand this, because I'm kind of new to the insurance pieces of this. So if I have an annuity, say for $100,000, just an example, and I cut off, say, 3/4 of the way, you know, after, I don't know, 10 years or whatever, I'm only going to get 15% or 0.15% of that back of 1%? Is that?
No, it's the value that you have in the annuity plus the interest over and above that, if I'm not mistaken. But correct me if I'm wrong.
Okay, all right, so I just
It's
want
not just 0.15% of the 100,000.
Okay, so no, that's why I just wanted some clarification, because I was getting a little confused, so that's why I asked. Thank you.
Yeah, but let's keep remember that the 1% was the floor. Under 1%, they wouldn't have to pay anything. So what this is doing is lowering that threshold so the consumer does get something.
And that's why I wanted to.
Okay.
Question of the chair
Yes.
before, would you just expound upon if it's less than 1%, they don't have to pay anything?
Yeah,
What's 1%?
Whatever the value of the principal value of the annuity at the time of when you stop paying it.
When the principal value of
Whatever
the
it was.
annuity, when you
whatever
stop
it was.
paying, is 1%.
No. That, when it's, you stop paying it, so it now has the cash value to cash out.
Has cash value.
So the question was, and maybe we'll have somebody else, Mr. Silverstein, explain this better
Isn't
than
there
I
a
will.
minimum amount of
But
interest
in
that you
saying
pay?
that, it's saying was that the 1% was assuming, was back in the days when everybody was gonna be 5, 6, was, the sky was the limit what interest rates used to be. So in this case, what they're saying is, so for some reason, it was NAIC model legislation, that they had a threshold of 1. If it was under 1, then there was nothing.
So-
The insurance company didn't have to give you anything.
So if there's a non-forfeiture value of $1,000, they would have to pay you 1% interest on that, plus the $1,000, which is the non-forfeiture value? Or is the non-forfeiture value 1% of something?
So Simon, why don't we have
Yeah.
the department? Because
Thank you. I apologize.
Because I'm wondering, in an era where interest rates are fluctuating, I understand generally speaking what the motivation is, because we're living in a low interest rate environment. But we're facing the prospect of interest rates rising again. And my concern is, if we set this at 0.15, what would be the
Yeah.
deleterious consequences
None.
for the policyholder?
Because this is just all this
Well,
is the
then who
threshold.
determines what the interest rate is? Because it says 3% and 1%, so now we're talking about 0.15 to 3, the range 0.15 to 3 rather than 1 to 3?
Representative, I'm going to have Ms. Silverstein.
Oh,
answer
okay,
that
thank
question.
you.
She has the statute, I believe.
Yes.
Thank you, Nancy. Yeah, right.
Thank you.
We don't need a hired hand to.
Thank you. You're just here to support it.
You had a reason why he wrote 30 seconds, because that's.
So again, it's Heather Silverstein from the Insurance Department. So I have the statute printed out. So the 409A4 is what we're modifying, and we're only modifying a piece of that. And what this relates to is saying these are the minimum non-forfeiture amounts. And it's talking about the paid-up annuities. And so my understanding from what this is that the value of what the annuity is at the time, plus this interest rate. So before, it was a 1% payback. Now we've lowered the floor, and part of the reason that we've.
Can we set an example, like a dollar amount that a typical annuity might have been, and so people can do the math?
So like 100,000 plus 1% of that, okay? So you're getting your 100,000, if that's the value.
Plus 1%.
Plus the 1%. Now the floor is gonna be lower, and part of that is because of the availability of these products. The industry is saying to us, we can't keep on offering new contracts with this interest rate. And so if we have to pay the money back, okay, if somebody surrenders.
So they're effectively saying we're in a non-competitive environment due to the regulation that we can't go below 1%.
Exactly. And so we're
So
trying.
if you lower it, then we will be able to continue to offer these products. And if the interest rates can go up, this is not a problem, because this is just a floor, and then we'll be competing against other issuers, so that it could be 1 or 1.5.
Bingo.
Okay, got it,
There
thank you.
you go.
Exactly, and I'm sorry if I caused confusion before about that, because
Okay.
that's what they were saying, is that, this is a floor, and we compete with each other, so if those rates goes up, we're gonna be competing
Yes.
for the consumers, and so,
But if it goes down, we can't compete anymore. We're out of it. We're out of the market.
right,
Okay, thank you.
exactly.
Great. Okay, now Representative McAleer.
I think there's a little bit of misleading information here. If what a current contract would say, correct me if I'm wrong, is that the minimum that a client would ever get back would be 1%. If somehow, so they couldn't pay less than 1%, even if they were earning less than 1%. Now we're putting that threshold down to 15 basis points. What that also does is means that the insurance company has to keep less reserves, which in fact would allow them to credit a little bit of a higher interest rate on a fixed annuity. So Chairman, when you said that if they earned less than 1%, they wouldn't get it, that's incorrect.
Okay.
They would get 1%. Threshold now at 15 basis points. I suspect that in a year or two, if interest rates go up, they'll come back with that and juice it up a little bit. I think dropping it to 15 basis points is a little excessive, but what do I know? Thank you.
Okay, well, that's a good point.
And I will say, this was, the change at the NEIC was in 2020, so it's been out there for a little while, and we haven't made the change yet, but we're now saying, okay, we need, because New Hampshire's a small market, and we would like to encourage like more insurance products here and consumers to have choice, so we'd rather have that competitive environment in New Hampshire so that for anybody that wants these products, they can have them offered to them.
But it does beg the question, why do we have anything? Why don't we just say whatever the product the company sells? Why, you know, if we have to keep revisiting every time interest rates yo-yo, why are we in the business? And I assume this is NIC model, but it just says, it kind of begs the question, why are we doing this when, if it's a free market out there and companies will be competing, so why not just let them have whatever they want to have?
And I'll have to check, but I don't know that this model has changed, was changing all along until 2020. I'd have to look into that.
Yeah.
But it might have just been the rate was depressed for so low. The interest rate was depressed for so low
Right.
that it motivated the NEIC to change.
To change it.
Question, Mr. Chair?
Yes, Representative Chair.
So to follow, did you in fact see empirical evidence to the effect that insurers were no longer issuing new annuities in New Hampshire because of the low interest rates over the course of the last year or two?
No,
Did you see a decrease? Because we're talking about the availability of product and this being effectively a barrier to the providers because they don't want to with the current floor of 1%. So what happened to sales over the course of the last 2 years?
So for us,
Year.
we don't
You have no idea?
We don't collect
don't
data
know.
on sales. We just know what we hear from industry and the NEIC as to
What you
why
hear.
this was problematic. And at the NEIC, just for everybody's benefit, that discussion includes both industry and consumer advocacy groups and regulators. So it's a full panel type of discussion. When they go about changing a model law, it does not take a few weeks. It takes months.
So, Representative McAleer, you have a would you believe?
I think I can answer his question. The fact is that a fixed annuity, which is simply a fixed interest rate, we promise you this, for sales of fixed annuities have gone down dramatically. What they've done is they've replaced it with a product called an indexed annuity, which simply says your interest is going to be based on something such as the S&P minus 5 points or something like that. So it's a different product has taken place. Thank you.
Which does beg the question, why are we setting these numbers here?
But we're not talking about the interest rate being paid on the annuity. We're talking
Right.
about the interest on the non-forfeiture value.
On forfeiture, and what's left, yeah.
Yes.
And Marty Mobley, our legal coordinator, just pointed out to me, the last time this particular law was changed here for us was 2004, for this particular law. So it's been a while.
Oh, of course, I remember that, yeah.
This is 409, RSA 409A:4, but that's the law that we're trying to
2004.
change here. So.
Representative Johnson.
I understand why you're doing it. Would it make more sense to word it so that it's, instead of having to keep revisiting this every, 5 or 10 years, to fix it so it's just X like a formula, rather than just keep changing the rate every 5 to 10 years based on.
So this is it's a question over her pay grade, okay? And this goes back to NIC models, okay? And one of my floor speeches when you talk about insurance is the one thing you want to do is not be different than other states. That the more conformity to uniformity, gets you more companies to do business in your state. Because we're talking about attracting somebody who's, who know where they are, but we want them to do business in New Hampshire, so if they know that we get that AAA rating because we're right on the money with our NIC model legislation, then they're more apt to do business in the state.
And I can respond to this in another practical matter. Okay, so the idea of not being different. So we approve rates and forms at the department, and if a company has to change, these are required provisions that have to be in the contract.
form.
If a company has to change their terminology for New Hampshire, they're not going to bother. There's
They
not
will stop
enough
doing
business to
in
do
our
that.
state. Exactly, exactly.
Thank you, I appreciate that. Help me understand it more. Thank you.
Right. Well, this was a good lesson. This is a good thing to get our arms around.
Right.
Good NIC day.
Thank you.
Thank you. Okay, and I have no more cards left. And I have, this is still 10 for, who is this guy? Daniel Richardson. He supports this bill. And then the blue sheet is Marty obviously supports the bill. And then Nathan Furness from Petty Flaherty, which represents AIG and is also in support of the bill. Okay, with all that, I will close the public hearing. Okay, just remind everybody, blurbs, we need to get anything, get any blurb, any motion, so you're working on yours? The sooner the better. Sooner the better. That would be too late.
Just an FYI, I found out this bill was a similar bill.
Open up the public hearing on House Bill 1582 and hear from the prime sponsor, Representative Torzen. Torosian.
Good afternoon, and thank you, Mr. Chair, and members of the Commerce Committee, the Commerce Consumer Affairs Committee, I should say. For the record, my name is Peter Torosian. I represent Rockingham County District 14, the towns of Atkinson and Plastow. I come here today to ask you to consider an ought-to-pass motion for House Bill 1582 FN. This is an act repealing the Granite State Family Leave Plan. I believe that this act goes against the Granite State way. It will be very costly, and this is not the time to add this kind of entitlement. It is already difficult for employers in the state to find employees in this current environment we find ourselves in. This program will only make it worse. There are already insurance plans available that won't cost the state taxpayers. Many private employers add this benefit if their employees request it. So in other words, if there's a need for it, private business will consider it. However, this plan only adds the benefit to state employees and workers. I'm going to go over some of the concerns I have, some of the points. This program costs taxpayers real money. It's not, it comes out of the taxpayers. FMLI is bad policy that's getting, has been put into the RSAs, and I don't think it should be done that way. I don't believe that state government should be in the business of adding this entitlement. And I believe it will cost more than what they've projected, but looking at the initial numbers. Family Medical Leave Act has been promoted as a voluntary program, but in fact it would again use taxpayer money without even requiring it being negotiated on behalf of the employees that will receive it. This will create a chain reaction where other employee groups will ask to be put on the program and increasing and bloating the cost to run the program. This creates a new state department, as you've probably seen if you looked at the bill, that will oversee this growing entitlement program. This will very likely lead to an income tax in the state. And one other point, very important point, this bill never had a hearing. The bill was, this bill was put into the budget. And so it never had a hearing. I think entitlement program of this size and significance should have a hearing so that legislators, members of the public can weigh in on the program. That never happened. So for all those reasons and more, I ask you to consider to pass this bill so we can repeal the Family Medical Leave Plan. And with that, I will take any questions that committee members may have.
Representative Bartlett has a question.
Thanks very much, Mr. Chair. You seem to know how much this is going to cost. How much is it going to cost? Because my understanding is the RFP isn't due until March.
That's true. We don't know that, and if you look at if you look at the fiscal note, that's what they talk about. And the very fact we don't know what's going to cost is another point that I didn't bring up, but I will now. It's concerning to me that we pass or put in the legislation something that we don't even know what the final bill is going to be. So the reason I believe it's going to cost more than what was projected, I could get you a number if you like. I don't have one with me today.
Oh, so you're an insurance agent?
No. No. But there have been projections done on this, and I indicated in my remarks I believe it's going to cost more than what people were anticipating because of the fact that more employees are probably going to demand this at the state level, hence adding cost to it. Also, I'd like to point out in the fiscal note, if we repeal this act, the money that's being put into this program to implement it and to fund it, the insurance premiums would go back according to what it says in the fiscal note, it would end up in the education fund. So that money could be used in better ways than doing this, in my opinion.
Further question,
Yes,
inquire?
could I follow up? So, I have, just to be clear, you don't know how much it's gonna cost. It is a voluntary program. So people that don't want to participate in it don't have to participate in it. But you still want to repeal it because you think this money somehow would go into the education program? Which education
Well,
program?
I'd be glad to read you the fiscal note.
I don't think that's necessary. I've
Okay.
got it in front of
So
me.
if I'm reading this thing correctly, it appears the money is initially from the insurance premium tax. And that if you're not funding, if I'm reading this correctly, if they're not funding it, then the money would go back to the general fund, which is where the premium tax is. But it also mentions the education fund. So I'm not sure exactly what's the division there in terms of how that money, but theoretically, the monies is the premium, it's the premium taxes where the money's
That seems clear as mud to me. Thank you.
Yep. So, Representative Burrows.
Yes, thank you, Mr. Chair, and thank you for taking my question. My question is, you said that, it sounded definitively that this program will lead to an income tax, and I wonder how you came to that, given that we don't know what the cost is or where your data would come from.
Okay, thank you for the question, Representative. So what I said is likely lead to an income tax, and the reason I said that is because when I look at the cost that other states have incurred doing this, it's a program that usually grows quickly. And I know and have family members that work for private companies that have a similar program. And the reason why it generally grows in cost is because in many cases when somebody goes out on a family medical leave type paid leave, oftentimes they stay out longer than they anticipate, and many employers have indicated that it's sometimes hard to get people back to work in the time frame they expected. So if that's the case, and again, I'm only going on what I've seen and heard with other states that have implemented this and with private businesses that have done it, that it could very likely, if it grows in size, lead to an income tax. That's a concern.
Further question, may inquire.
My follow-up is, do you have documentation of increases in income tax, these scenarios in other states?
Well, only so the other states that I'm aware of that have implemented it already have an income tax, so it didn't add an income tax. However, the cost of the program's grown, and if it's not funded other ways, that could lead, I'm speculating, could lead to an income tax. You're welcome.
Representative McAleer.
Correct me if I'm wrong, but I thought the only funding that the state would be involved in is the administration of the plan, and even that can be passed off to some private insurance company. So I guess I don't understand why you're saying the cost of this is going to arise, because the premiums are paid voluntarily by the employee.
That's true. However, and I'm not in the insurance company, I know some of you in here are, if the program grows bigger than what the initial projection was, in other words, right now, the way I understand it's going to affect 11,000, give or take, employees. If it's given to other state employees, that number could go up substantially. And depending on, if the program's implemented, the number of people that use it and go out on medical leave, that will add the potential premium cost to go up because of, based on employers I've talked to, their costs have risen over the years because, again, people are using the program, that's great, but oftentimes they stay out perhaps a little longer than is anticipated, and that's, insurance companies aren't in the business of losing money. They have to fund it somehow.
Further question, may inquire.
If a private employer has this, and if the private employer is paying for it, I could see that the cost might go up and affect the employer. But in the case we're talking about, the cost could go through the roof, and if, long as this program is voluntary, the state employee can either opt in or opt out. So it doesn't affect the state at all. And you run something like this digitally, whether there's 11,000 participants or 20,000 participants, it's not double the cost. It's a minimal cost to add additional people because they're paying the premium. All the state is doing is administrating the plan. And do you have any estimates of what the plan administration costs would be?
I don't, and perhaps somebody else testifying after me may have those numbers. I only know that again, looking at other places where this is done, oftentimes the number of people requesting or demanding the program goes up. And again,
So let me this committee actually did hear the family leave statute, the bill. Obviously, this one is different than what we heard. The one we heard was going to be mandatory to employers, and that's why it was accused of being an income tax, because the employers had to do it. In my understanding there, and again, I'm reading all this for the first time, and we'll have a subcommittee to work through this, but my understanding, the initial money was to get the program off the ground, and that the money would be returned once the program got going. Now, under that assumption was that in this case that the state is adding some employees, so they're giving some critical mass. But at the end of the day, the program theoretically would be was paid. It was whether the employer had the choice, or whether they wanted to take the full amount of money out of the paycheck or cover it themselves. But in terms of what the state of New Hampshire would do, is yes, it would be the full cost or whatever the employee is, because we would have to renegotiate our contract with the state employees. So at this point, there is some cost related to the state to have the state employees participate. But at the end of the day, the initial monies was really just to get the program off the ground, and there would be a separate insurance, and that's what's going out to bid right now, is who is going to be the administrator of the program. And obviously they're going to want to cut, but they're the ones who are supposed to manage the money, manage that the amount of money that actually pays out is relative to how much is getting paid in, and plus getting paid their fee, with the expectation at some point in time the state would be refunded for what our initial costs to get the program off the ground.
but it's also my understanding that there's a new state agency, or employees have been added to.
This is absolutely through the Department of Labor, and the way they showed it to us was the unemployment. Excuse me. And the way they showed it to us is that the scheme, and I'll use the word scheme, was that just like an employer pays the unemployment for their employees, there would be another field in that form, the unemployment form, and that would be allocation for payroll for this fund. So it would be administrated through the state, through employment security, and that's obviously, there's going to be a cost to the employment security to make that operate. But right now, employment security is funded through what we charge unemployment tax now. So in terms of where's the impact to the general fund, the impact of the general fund is we're taking money out of the general fund now, or education general fund, that normally would go there from the premium tax, the insurance premium tax. So that's where the money, follow the trail of the money. But that, if I'm reading this correctly, again, I don't know, but yes, it would create a new department, a person in the department, and that fees. The whole argument around was making sure that any insurance company would operate, which is the payout can't be greater than how much money they're able to collect through the fees and collecting the fees for whatever's assessment paid to those employers who choose it. Representative Johnson, do you have a question?
Thank you. So, as you just explained it, Chairman Hunt, and hopefully if I get this right, so if the funds started growing higher than what we already took out of the taxpayers, we would then have another line that employers would now have to pay to offer the state employees this fund, because you would have it as a, like you said, the unemployment tax. There would be another line of tax that employers or private employees would have to pay on through unemployment. So basically, you're saying another tax for residents of New Hampshire in a roundabout way, yes.
Okay, so it is a tax. It would absolutely be a tax. The way it was supposed to be considered, now obviously it was different in the bill we had, was all employers had to participate in it. But, which then, that's why we labeled it an income tax. But, because it's on income, on payroll income. The issue would be that if this is voluntary, that the employer chooses to do it, that yes, that employer that all employers who are participant in the program would have to pay more if there were too much claims to it. The state employees portion, which I obviously, I don't know anything about that because that was not in the bill that we had 3 or 4 years ago. My understanding was that the state employees actually have a family leave type program now, and so that the monies were supposed to be really what we're spending now in what they're already offering. But I do not know that for a fact. Okay, so I don't know. So obviously we need to learn more whether that's true or not. But at the end of the day, I would say the fundamental question is if the bill says today that any employer may join it, if the fear is that suddenly we all are not here anymore and there was somebody else in charge of our legislature and our governor, and they decided to make it a shall, like the original plan was, then they would, that we have facilitated that from happening. Theoretically, they could do that anyways, even if we hadn't created this model ahead of time.
Mr. Chair, with your indulgence, could I just add a point based on what the conversation is? And that is, there are many people that have questions and there's some uncertainty to the costs in this program. So that lends to the idea that if we repeal this and somebody wanted to bring it back, then we could have a hearing on the bill and have these details worked out before you pass the bill, which is, with this one, it's kind of putting the cart before the horse. We have all these uncertainties. And my experience has been, particularly with government agencies, that if you don't know the number, chances are the numbers, over time is going to grow. And that's my concern. We didn't get a public hearing on this. It was put into the budget, and many people would like, I think, to know more on the details. So this is one way we could get there. We could repeal it, and then, if somebody wants to bring a bill forward and have a hearing on it, then hopefully those details would come out more precisely. Thank you.
I will hope within next month we'll learn all we need to know. That's true. Yes, Representative Boulay.
Thank you, Mr. Chair. Thank you for taking my question. So this bill was passed and signed by the governor. So he supports Granite State Paid Family Leave Plan, obviously. So, and I believe do you believe that this is good for families and in the state of New Hampshire? And just really just answer that, if the governor supports this and you're the party of the governor currently, why would you go against the governor's?
Yeah, I don't know where you're going with this now.
No, I'm just saying the governor.
Well, forget about the governor. Your question was, don't you think this is a good thing for families?
That was the first, but I also wanted to remind him that the governor did sign this bill.
Okay, but that's not really an appropriate question. We don't talk about people's motives.
All right. So just explain to me, do you think your constituents like this bill, the family leave plan?
In all honesty, I haven't had any constituents tell me they do like the program. And, is there some merit to having a plan where you can go out on family leave for various items? Yes. But again, I have an acquaintance that works for an insurance company in Massachusetts. That company enacted and provided a family medical leave program that they fund. I'm assuming through insurance, I don't really know. But in this particular individual is in management down there, and one of the problems they have is when people go out on a legitimate reason, oftentimes it's very difficult to get them to come back to work while the benefits being paid and the crisis has subsided. Then it's oftentimes difficult to get people back. And another way I would answer the question is, there's many companies and I think government agencies that when you have a problem at home, they are sympathetic to that, and there's ways to do it without, in a short period of time, I'm not talking months and months, to help that employee out without having a program to do it.
Representative Johnson.
So isn't it true that you can already buy a plan similar to this privately, any individual? You can go out to an insurance company. Aflac is a perfect example because
Aflac is
I
only
have it.
for your physical ailments. This is giving you money to stay home, take care of somebody.
I do believe they have a plan like that too.
So I think what you're referring to, Representative, and thanks for the question, is that there are programs, various catastrophic programs for people, but it's also, from what I've read, there are programs that businesses use to, they fund this partially through insurance. So it's my understanding there is some availability of coverages there.
Aflac will cover you for you as an individual if you have to stay home and have to leave work. But Aflac does not have a program for family or affiliates. So the only time it's helping you out, Aflac is for you, but not for if you're home taking care of a sick kid. So it is somewhat unique. But all right, thank you very much.
You're welcome.
Okay, the chair will call on Len Turcott. Len, didn't I just see you over in labor and so you already got boned up on this bill, so you know more about this bill than we do.
Mr. Chairman, I know more about this than I care to know. Thank you, Mr. Chairman. Representative Len Turcott, I represent Stratford County 4, which is the town of Barrington. I currently serve on the several committees, Labor Committee, Finance 2, Redistricting, and I'm also a senior advisor in the House Majority Office. Most importantly is I've had a lot of experience with these bills. Back when I was in the House my last term, that was when Senator Feltus tried to put through a bill that would have mandated as you said before, a tax of 0.5% on the entire, everybody in the state of New Hampshire. I was the point man on our committee on that. I worked with the department on those issues and the numbers, so very familiar there. On this particular issue, I'm also very familiar because I served on Finance 2, which was, I'll get into a little bit more of the history of why we are where we are and how we got here, but Finance 2 was involved with this, and then I ended up on the committee of conference for HB2, where this was one of the two final issues. So first thing I want to talk about is when this was discussed by the promoters, Governor Sununu, he sent it over in HB2, it was sold as a voluntary and a private insurance plan, and that is not true. It's partially true, but not true. For the 11,000 state employees would be given this program cost-free without the need to negotiate the benefit. Now, later on, we can talk about numbers and what the potential cost is on that, but 11,000 state employees would get this for free on the backs of the taxpayers. So what's going to happen after that, the idea was to make this a private insurance plan that other employees in the state would use. Well, let's go through this logically and see what's going to happen. Number one, plans like this are extremely expensive. We don't know, we passed this through the House without ever knowing what the bill was going to be to fund the 11,000 state employees a year. It's going to be a huge figure, and we'll talk about that to the end. But private employers are not going to use this program. They're simply not going to use it because it's going to be too expensive. And again, we'll talk about the costs a little bit later. So what's going to end up happening is it's going to end up being a entitlement program for the state workers, 11,000 of them. After that, when no private individuals get involved with the system, then the other public sectors are going to be coming to the state or to their local school boards, towns, say, hey, state employees are getting this paid for on their tax dollars. Why aren't we getting it? So it's going to turn into a program for the benefit of the public sector. Private employers are not going to get into this. And of course, once it becomes law and it's finalized, of course, this legislative will to eliminate it at that point is going to be too late. So let's talk about where we are in the program right now. Right now, the executive committee just approved $1.9 million last month, $1.9 million to give to a company to go out and look for bids and implement the system. $1.9 million. That's just to get the program up and started. The plan itself won't go into effect, if it goes into effect, until the very end of this year at the earliest. So now I'll hit a few general points and then we'll get into a little more specific. Program like this strictly incentivizes people really to take advantage of the program. And if you remember back, or you may not remember back, but when the issue came up, Senator Feltus's bill, the only way to make an FMLI plan like this work, if you want to call it work, making it work, is to force everybody into it with a tax. You cannot do an opt-in system. And when we had the Senator Feltus's plan last time, once it was determined that there was no way we were going to make a mandatory program for every employee in the state, they attempted to bring it back to an opt-in, opt-out. That just makes a plan even more unsustainable than it would be under forcing. So it just doesn't work. And interesting point, I mean, have we learned nothing during the last couple of years? When you pay people to stay home and work, it doesn't incentivize to work. Why would a private employer now get into a program that's going to incentivize his individuals or give the opportunity to not work and get paid when they can't find employees now? That's another reason why private employers are just not going to go along with this. A lot of companies offer some form of a paid leave now, or a combination of personal days, sick days, vacation days. They roll them all into one basket, and they give the individuals that time now. And the companies that do that, and we've had them testify before labor, they do it because they believe it helps them sometimes to retain and hire the employees by giving them that kind of a basket of days off. Another way that individuals could take advantage of a paid time off, because federal law requires an employer to allow an individual to have time off through family leave. It's unpaid in most places, but there's a requirement. So there's nothing that prevents an individual, and I don't have them with me, but I had calculated one time how little money it would take for an individual to put aside each month to actually pay for a self-insured benefit at some point should they need to take time off to care for under the family medical leave plan. As I said before, private insurance plans are extremely expensive. And as I also said before, the only way to make it work is to force people into it. When we were talking about the Senator Feltus's plan before, when they had nixed the idea of going to a mandatory 0.5% tax, and they went to an opt-in. Give you an example of why an opt-in system doesn't work properly timed. If an employee could opt into a system, pay $250 in premiums, and take out a $5,000 benefit the following year. That's why an opt-in, opt-out system just won't work. Now let's talk about the states that have paid family medical leave, because we hear about those all the time. California, New York, New Jersey, Rhode Island, Connecticut, Massachusetts, Washington, and Oregon. Are those really the states that we want to emulate? These are the states not only that have some of the highest tax rates in the country, but these are the states that people are fleeing net negative migration to get away from such states. When there were, matter of fact, in the preamble to the HB2 language, they talk about they believe that this is a way to, get people to come to the state, work for us, and this and that. People don't come to the state because you got a FMLI plan. They go to the states where it's low tax and you can, you can do well and not be taxed to death. So let's talk about how we got to where we are, okay? HB2, when Governor sent it over to us last year, included the plan. In the House, we worked extremely hard to get it removed from HB2 because we knew if we couldn't get it out of HB2, a budget would have not come out of the House this year. And after a bunch of work, several of us were able to get it removed, and we finally passed a budget and it went over to the Senate. When the Senate got a hold of HB2, I'll just say there was pressure on them to put paid family medical leave back in. And at the very end of the process, at the end of the committee of conference, I'm not going to get into the gory details, but it did end up into the HB2. Now, a lot of people don't know a lot about this plan. I bet you most of you don't know a lot about this plan. And the reason you don't know about it, because nobody promoted it. Why didn't anybody promote it? I heard this representative here talk about before, about Governor Sununu and his influence. But the reason it wasn't promoted, because it's a horrible program. Right after the budget was passed and signed, I was at several meetings where the executive, governor, the Senate president, and the Speaker of the House spoke about all the glory of the HB2 issues that we had passed, and not once was FMLI mentioned. It's because it's a bad issue. It's a bad campaigning issue, and it's not something that people want to promote. I was in a Labor Committee hearing earlier, and nobody testified. Nobody was there from anybody's office to back it up. There's nobody here from any of the branches that I just mentioned to back it up. That's because it's a bad policy. Fiscal points, financial points. I heard several people asking about how much this would cost. Now, I'm not going to give you exact numbers because it's based on a lot of variables. A lot of these variables I worked with a commissioner when Senator Feltz's plan was here. And it takes a lot, there's a lot of things involved. I will say that during our last few years back, we had a firefighter testify that he carried private insurance that would cover very similar lengths of time, and under certain circumstances actually that were a little less. And at that time, he was paying $60 a week for his plan, $240 a month. The numbers that are shown in here in the HB2, $5 a week, something like that, it's insane. There's no way that's going to work. So what kind of numbers are we looking at, do you think, for just to pay for the 11,000 state employees? That's based on what they call an uptake rate. How many people are going to use it? We don't know that number. You'll hear the actuaries, they'll say anywhere from 4, 8, as high as 10%. And when you start talking those numbers, I'll just throw out a couple ones for you to consider, just to pay for those 11,000 state employees, without considering the fact that once 8% of those employees take the leave, how are you going to cover that lost time? You're going to cover that lost time with overtime? Are you going to have to carry extra employees? I mean, those are all kinds of numbers you got to figure in, and this says nothing about them. Nothing. When you look at an 8% uptake, 10% uptake, you're talking somewhere between $9 and $12 million a year, just for those 11,000 employees. So this is not an insignificant plan. It's not a total voluntary plan. The taxpayers are picking up the tab for the 11,000. So with that, I will be happy to take any questions you may have. And I do rise in support.
Representative McAleer.
Thank you. Thanks for taking our questions. I guess I'm totally confused because I understood that the only bill that Sununu would pass was a voluntary bill, which, by the way, I agree with you that that's never going to work. But I thought that that's exactly what this is, and you're telling me it's not. And yet Sununu said the only thing he would pass would not be a compulsory, mandatory, but totally voluntary. So I'm wrong. Is that correct?
You're partially wrong, correct. 11,000 state employees will get this as a paid taxpayer benefit, period. Then they opened it up for voluntary to private businesses, and actually you could be voluntary for other public sectors, but then it becomes voluntary for private businesses. What I'm telling you is when you consider the costs involved, private businesses are not going to do this. It's just too expensive. So basically what it ends up being is simply a, as of now, when it goes into effect, it'll be a taxpayer-paid benefit for 11,000 state workers, period.
Thank you.
You're welcome.
Any other questions from the committee members? Representative Burrows.
Yeah, I'd just like to ask you, and this is a what-if scenario, okay? Let's say we have a state worker, single mom, has children. One of the children becomes very sick, and the mom needs to be with that child. Why wouldn't they be motivated to go back to work if they're a single parent and they need to feed their family? And what would the impact be on the state if we had people who needed to care for sick and dying family members? What would that do to the management and running of the state?
I don't have an answer for that. I'm not going to answer that.
Okay. Thank you very much.
Thank you.
I have one other card, Amanda Sears. Campaign for Family-Friendly Economy. Now, you don't write whether you support or against the bill. I will tell you. Okay.
Well, thank you.
Okay, so you need to push the button and keep
that
that
work?
thing close to you. Yep.
Okay, all right, thank you. My name is Amanda Sears. I'm the director of the Campaign for Family-Friendly Economy, and I thank you for the time. I can answer a lot of the questions you were asking earlier and clear up a bunch of the misconceptions between what the program you heard before and this program. They're very different, and so I'd be happy to do that. I also did prepare things that I wanted to say that will take my 3 minutes I told you about, so if I'm able to answer your questions later about that or clear those things up, I'd really be happy to.
Okay.
I do want to say, you know, I come at this from a very different perspective than the couple of speakers before me. You know, paid family and medical leave is very important for workers and businesses and the economy. And the pandemic has only underscored the value of having a system for ensuring that people can take the time they need for medical emergencies without putting their financial security at risk. But the governor's program that is now the policy would artificially prop up a private insurance provider, and it is not an effective paid leave program that meets the needs of Granite staters. What the legislature should do is repeal this program and replace it with one that covers all working people. So that's why my position was not like an easy check mark there. And we would be in support of an amended version of this bill that would repeal it and replace the program that's currently in statute. The previous speakers were right. There were no public hearings surrounding passage of this program, and that means that there has been no due diligence to solve the many, many problems and unknowns that exist with this program, like access, cost, implications, et cetera. And those things should be considered to build a program that would work. This program entirely leaves out a path for employees of employers with under 50 people. If I could back up and just describe, if I would have a little bit extra time than the 3 minutes. There's 3 different pieces of this program. One is the state employees coverage. That would be done through a contract with the state to a private insurer to cover the benefits for those private employees. The second piece is a tax incentive to private businesses to encourage those businesses to pick up a contract with that same insurer in order to build the pool of people who would be participating. And those contracts would be directly between the employee, that employer and the insurance company. But they would get a half of their payments that they pay in premium returned as a credit to the business profits tax. And so that could be a significant cost, and I didn't have figures to say what exactly that is. The third piece of this program creates an individual pool, which would be run by the Department of Employment Security, and the Department of Employment Security would be the collections agent for the premiums from individuals, and then turn those over to the private insurer who would administer the program. So that's just to say a little bit about how it's structured, because I don't think that was necessarily clear earlier. So for the employers that would have, so right now there's not a path at all for people in companies with less than 50 employees to get this program, to get this benefit, unless their employer opts in to cover all of the people. So there's not a path for those people to participate in the individual pool. And employees of those small companies already are less likely to have this benefit. But if employers that do decide to opt in and cover their employees, they would get the competitive edge to say they offer the benefit, but then there's nothing in here. They'd get a publicly subsidized rate and or tax credits, but they could also deny employees to take the benefit. There's nothing that keeps them from punishing people, firing people for actually taking the benefit when they need it. So they could be retaliated against, even though these would be, publicly subsidized benefits. They also, there's a lot of complications about what if people work for 2 employers, one that's bigger than 50, one that's smaller. They'd be eligible on certain part of their hours and not eligible on certain other parts of their hours. The insurance company would have control of the cost of premiums, the rate setting, which could lead to higher costs for employers with more women or people with disabilities. They would be able to deny claims and make the decisions about that to save on the cost of benefits they would have to pay out. And there's no process outlined for appeal of denied claims or even jurisdiction of who's responsible for who those appeals would be made to. There also is, it's silent on, my pages are messed up, sorry about that. It's silent on essential operating questions like, what if an employee purchases the independent coverage for leave, but the employer fails to grant the time off? What if the employer recognizes the time for leave, but the independent insurer denies coverage? How are these disputes resolved? There's nothing to indicate how that's done. So the state would just be acting as a collections agent for the private insurer. And I haven't seen a legal opinion on whether it's okay for the state to charge low-income people in the individual pool the same premium as higher-income people, but provide them with significantly different benefits. Because the way that the individual pool rate is set right now is that people would pay up to $5 for the benefit, but then what they would get, and that's not differentiated between what they earn. They would pay up to $5. It would probably be $5. And the state would pay any cost over that, so that's another thing that is in the bill. And then whether they make $130,000 or $12 an hour, their benefits are based upon their wages. So the benefit would be paid out very differently for low-income people versus high-income people, even though they're paying the same premium. So just the bottom line, the reason that there's been demand for state policy for paid leave is because 2/3 of working people don't have it. And there's significant disparity between who has it and who doesn't. And the people least likely to have paid leave are working people with the lowest incomes and the most significant caregiving responsibilities. Public policy should be used to eliminate that disparity, but this program will not do that. It perpetuates the status quo. It seeks to artificially prop up a private insurance market that's failed to function on its own, with no actual commitment to ensure working people will have paid leave when they need it.
Great. So my memory in the original bill, that part-time employee, if you worked less than 30 hours, you could never make a claim, and yet you were still being taxed. You were still being assessed, unless your employer was covering it himself. Did they solve that problem in this
That
bill?
was never a situation. It was based both the premium and the payout of wage replacement were based upon the number of hours worked. What you might be remembering is that there was just like there is for unemployment insurance, a requirement to work a minimum of $7,500 worth of wages in a certain period of time. There was that minimum that was, that people would have to earn.
It was 30 hours. I was pretty positive. It was something that said you had to work 30 hours to be
No,
eligible.
that was never the situation.
Okay.
With this bill or with that one.
Okay. All right. Representative Ammon has a question.
Thank you, Mr. Chair. Thank you for taking my question. The bill before us is a repeal bill, and it sounded like you have many issues with the program that's in place. So would you be in favor of repealing this program and then coming back later and instituting a program much more to your liking?
I think that the problems involved with this program really need to be solved. And there are many ways to do that. I think the way that we see it is that we should solve these problems by creating a program that works. And the way that a program would work would be to cover everybody and have a pool that would be large enough to be able to deal with adverse selection of benefits.
Further question.
Follow up. So are you in favor of this bill or are you against this bill? I'm confused.
I'll tell you what I wrote on your card. She supports the bill with amendment.
That's exactly it.
Further question, you may inquire.
And so your testimony was describing an amendment that you'd like to see to completely change this bill into something else?
It would be describing an amendment that I know would not pass this legislature, but that amendment would repeal this program and replace it with a program that would cover all working people.
Representative Johnson.
So would you be in favor of us of supporting this repeal and then coming up later on with a better program? Because this has so many flaws in it that I think it would be more convoluted to try to fix it now the way it sits.
I benefit from not being somebody who will actually be pushing a green or a red button. And so my position is that I would support this with an amendment that would repeal and replace it.
Okay, that's half a loaf. Either way you go.
I think it's important to know what the problems are because I think because this never had a public hearing, there's not a process for solving all these problems. And in the absence of solving the problems, we're saying that we're meeting a need and and we're not meeting that need. And so I think that's a really important point.
Representative Burrows.
Just 2 seconds. I just checked to see if I had gotten it. Could you send out the information that you were presenting? It would be really helpful or something.
Sure.
That we could have a reference. Thank you.
Representative Bealham.
Thank you, Mr. Chair. Thank you for taking my question. Who do you represent?
I work for an organization called the Campaign for a Family-Friendly Economy, and it's a New Hampshire-based advocacy organization that works to advance policies that help people to make ends meet and be there for their families when they need to be. A nonprofit organization.
And just
Further question, you may inquire.
A follow-up. If we repeal this, how can you guarantee, or your group, that another bill will come forward within the next 2 years, 4
I
years?
offer no such guarantee.
Okay, thank you.
So, how did you feel about the Feltus version of the bill?
That was a different program, and we supported it wholeheartedly, aggressively.
There you go. Okay. Any other questions? See none, we thank you very much. Oh, we do, yes.
This program that's presently in place.
Yes.
Or that will soon go into motion or whatever, is voluntary. Does that mean that only those people who have volunteered to pay for it will pay for it?
Well, voluntary in the sense that,
Because
if we don't talk about the state employees.
Not everybody has to partake in it, but is it only those people who volunteered to pay for it?
Okay,
get
let's
to pay
just take the state employees out of the soup. Yes, it is
See,
only.
no, the answer is no, because the taxpayers have not volunteered to pay for the state employees. But they can volunteer to pay for themselves. So the answer is no.
Thank you very much. To answer your question, we are a representative government. We are a republic. So the taxpayers are not ever given a direct opportunity to vote on what we do here. As a matter of fact, we're one of the few states that don't even let us have citizen referendums. That what we do have is us. So if we were to fund the money in the budget and vote for that budget, then yes, for all intents and purposes, it would hold true that only people who elect to be in it have voted to be in it. Until we get voted. Okay, have no more cards. And we have 7 people in support, 6 opposed. And we have Al Balacero and Len Turcott in support. And with that, we will close the public hearing.
See you next week.
My new vacation dates, my new vacation dates are